Hello traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we're going to explore the Fibonacci Price Action Strategy, which is an effective method for identifying key levels in the market and combining them with price action signals to refine your entries and exits. Stay tuned until the end of this video as you will learn exactly how to use this strategy step by step and avoid common mistakes along the way. So without wasting much of your time, let's get started. We are on the GBP USD on the 1 hour time frame, and I will use this to explain the Fibonacci price action strategy. But first of all, what is the Fibonacci price action strategy? The Fibonacci price action strategy combines two essential tools in trading: Fibonacci retracement levels and price action analysis. Fibonacci retracement levels are horizontal lines drawn on a chart marking potential areas of support and resistance based on the mathematical Fibonacci sequence. You can see this is the Fibonacci retracement. This levels the 23.6%, the 38.2%, 50%, the 61.8%, the 78.6%. These levels helps you identify where price might stall, reverse, or continue moving within a trend. They are particularly useful during pullbacks in trending markets, offering insights into where the price might react. Price action, on the other hand, involves analyzing raw market movements without relying heavily on indicators. By observing candlestick patterns like hammer, engulfing candles, or shooting stars at key Fibonacci levels, you can confirm whether the price is likely to reverse or continue its trend. Alright, you use this strategy by first identifying the market trend, whether it's moving upward or downwards, and then plotting Fibonacci retracement levels between recent swing highs and lows. And these levels act as zones where price corrections often occur before resuming the trend. So I'm going to talk more on that. I'm going to go into details when we talk about the main strategy, so ensure you watch this video to the end. The synergy between Fibonacci retracement and price action allows you to pinpoint entry and exit points with greater accuracy. When price reaches a key Fibonacci level and shows a reversal candlestick pattern, it confirms that the level is significant and worth trading. So let's quickly look at the strategy. Let's hop on the charts and talk about how you can trade using this strategy. So the first step is to observe the market trend. Are we in a bullish trend or are we in a bearish trend? For example, here we are in a clear bearish trend. It's very clear. And this is the first step. Observe the trend. Are we bullish or are we bearish? Here we are bullish. So I'll use these two cases to explain. We'll have our bullish and bearish examples with these two market contexts. So after that, once you've identified the trend, plot Fibonacci retracement levels, and to do this you have to locate the most recent swing high and swing low on your chart. So looking at this downtrend, we have this swing high to this swing low. We also have this swing high to this swing low. We also have this swing high here all the way to this swing low, and it goes on. We have this swing high here all the way to the swing low. So this is the next step. After identifying the trend, you should plot your Fibonacci levels on the chart from swing highs to swing lows, from swing lows to swing high, depending on the market context. This is a bearish market, so it's from swing highs to swing lows. For a bullish market, it would be from swing lows to swing highs. So I'm gonna plot from this swing low to this swing high, and we have from this swing low right here to this swing high here. We also have from this swing low here to this swing high here. Okay, before we had this deep pullback, this deep retracement. So that is it. Let's go back. So once you've plotted your Fibonacci levels, after plotting your Fibonacci levels, watch how price behaves when it approaches these zones. Look for price action signals such as candlestick patterns to confirm your trade setup. For example, let's look at this one, and for this example, price is expected to come back. I'm just going to delete these two Fibonacci, I'll put them later. So we have price reacting off of the 61.8% and the 50%. These are key areas where we should be expecting price retracements. We should also expect at the 38.2%, but this doesn't work all the time. We can also look out for the 78.6%, but most times price reacts from the 50% and the 61.8%. So looking at it, we can look for price action around this area and candlestick patterns. Here we have price breaking below this low and coming back to tap into this other block to give us a sell to the downside. But if you are not an SMC trader and you're not familiar with the other block called the stems, so you could just look out for candlestick patterns like this engulfing pattern right here. It's very clear. This right here is an engulfing pattern. You have this green candle followed by this red candle which engulfed it totally. So this is a signal to place a sell trade at the next candle's close, which confirms the trade. Our stop loss above the high of that engulfing, and I'll take profit all the way down to the 0% of our Fibonacci, which is this level right here. It's very easy, it's very simple, and that's how we're able to take this trade. This was a sell trade. Let's look at the next example. Quickly delete all of this. Let's quickly delete all these lines. And the next example is this one. We have this Fibonacci level. I deleted it earlier, remember. So we're expecting price to react to the 61.8 or the 50%. And you can see price reacting off of that, giving us an engulfing, a bearish engulfing. Very clean. This setup is so perfect that the next candle, upon the next candle's close, we can look to take a bearish trade with our stop loss just above that high, and I'll take profit at the 0%. This is a 1:1.84 risk to reward ratio, and that is that for this trade. Let's quickly look at the next example. We have from this high all the way to this low, and we should expect price to react off of this area, the 61.8 and the 50%. So looking at it, we should look for key candlestick confirmations. Here we have this engulfing right here, have this green candle, we have a red candle totally engulfing the green candle, indicating that yes, sellers are in control. We should take a sell trade at the close of that candle. Our stop loss above the high, and I'll take profits all the way to the 0%, which gives us a 1:2.3 risk to reward ratio. It's very easy, and you can use this to trade. See our take profit hit right here. And looking at the last example, we have price reacting off of the 78.6%, and you can see we are expecting the 61.8%, but we don't have any reaction there. We don't have any candlestick pattern reaction right there, so we won't take any trade. Instead, we have this high volatility. Then we have this pin bar. This is a shooting star, and this is a bearish pin bar, or you can also call this a shooting star candlestick pattern, which signals bearish reversals. So you could look to take a sell trade at the close of the next candle, confirming that bearish momentum, and our stop loss above this high or above this general 100% high of the Fibonacci, and I'll take profits all the way down to the 0%. We have a 1:4.57 risk to reward ratio using this Fibonacci price action strategy. It's very simple. I'm sure by now you understand the assignment. Let's look at the bullish examples. It's the same thing. You should expect price to react from the 61.8%, and the next thing is to look at price action. We have price giving us this market structure shift, and we also have We don't really have a candlestick pattern confirming our trade setup right here. These bullish candles don't really show much of bullish momentum. As you can see, we have wicks here, have these wicks showing a weak buying momentum, so we should like wait a little further. But if you are an aggressive trader looking to just enter based off this reaction, you will likely take a loss from this. So which is why it's always advisable to always look at the candles, observe the candles. Are these candles really indicating buying momentum stepping into the market? Yeah, that's a valid question to ask. Now this is price reacting off of this trend line which I drew, and also you can see a 3 inside up candlestick pattern right here. We have a red candle followed by a green candle, 2 green candles actually, and the second candle closes above the first candle, which is a red candle. We also have further green candles, more of green candles than the red candles. You also have this Quasimodo, have this push to the downside. Just gonna shift this a little bit. Have this Quasimodo right here. We have this break of structure, then we also have this change of market structure shift here, and a pullback, which is this red candle, into this other block before a continuation to the upside. So traders who trade SMC, if you are an SMC trader, you understand what I mean here. So you just look to take a buy trade from this area all the way up with your stop loss below this low, and your take profits all the way to 1:2 or 1:3 risk to reward ratio. Or you could just target the 0% right there, and this calls for a perfect trade. And it goes on and on. I think you understand the assignment right now. For this one, we reacted from the 23.6%. Price didn't exactly get to the 50% or the 61.8% here, so we just had this reaction right here. We have price giving us a change of market structure shift right there, and we have this other block, this zone. This was resistance turned support. We could look to take a buy trade from here all the way up, stop losses below here, and we have our take profit at the 0%, which gives us a 1:1.52. That's that. For that, we have another example here, the last example for us today. We have the 61.8% and we have the 50%. Remember, these are areas where price is likely to react from, and at the same time we have price action, we have market structure shift here, and we have even the retest. We have price coming back to retest and the push to the upside. Very simple. And so you could take your buy trade here if you're an aggressive trader with your stop loss just below here. I take profit at 0%, or you could wait for the retest, which occurred here, and it's almost the same thing. It's exactly the same thing, and that's how you'd have been able to take this trade off using the Fibonacci Retracement Price Action Strategy. It's very straightforward, and there are no much indicators needed, just the Fibonacci and your knowledge of price action. So right, traders, you've come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.